All right, so welcome once again to the presentation T3 Live is hosting tonight with my dear friend and mentor, Sami Abusaad. He is, for those of you that have not heard me rave about him in the past, he is definitely one of the most disciplined, down-to-earth, kind, professional, responsible traders I have ever had the joy to work with or mentor under. I have learned so much from Sami in the past, 7 years that I have worked with him. He has taught many of our courses when we were with Christine and we merged with T3. He's done our in-person mentorship. He taught our prop traders. He does our T3 Technical Strategies Lab now for T3. And he's the lead moderator of the Black Room, which is a virtual trading room that we have now at T3. Um, he is, a real deal professional trader. He sends me his broker statements every month. I know he's trading real money. I know what he risks. He's the real deal. And for how he trades and scalps, not only on the very short 1 minute, 2 minute time frames, but even in his swing account, I saw him double his swing account, I think, within 8 months last year, and doubled his day trading account within 4 months, all while keeping a clear head, guiding others in the room. And he's an overall nice guy. So I really think you're going to enjoy the presentation with him tonight. He's going to give you some strategies that he uses just for a rundown of the evening so you know what to expect. He'll talk about his strategies in the first half of the presentation. Then we do have a special offer if you'd like to follow Sami there in the middle of the presentation, and then we'll follow up with some results that you can see that he traded live in the room, and also a Q&A. So you can definitely type your questions in throughout the presentation. But we will be answering them at the end. Also, Sami Syed and myself will be answering questions throughout the presentation if it's not specific to Sami Abusaad. And that is correct. We do have two Samis. We'll try not to get them too confusing for you. But without further ado, let me hand it off to my dear friend, Sami Abusaad. Enjoy.
Hey guys, good afternoon. Sound check, please. Can you hear me? Just doing a sound check. Hey everybody, good to have you all. Good to see you. Good to be with you. Thanks, Amber, for that really kind introduction. I don't know that I deserve all these kind words, but just want to say thank you, Amber, somebody I've worked with for the last 6 years plus. And she's just the ultimate colleague to have and friend. She's really dedicated to her traders, and a lot of you probably know her by just corresponding with her. She's there for you, right, when you need her. So feel free to reach if you have any questions or need help at all. Today we're going to talk about just one simple strategy. Feel free to ask me any questions you want. Really, I mean it. Any questions, and I'll be happy to answer them. Unfortunately, you can't see each other's questions. It's just I guess the broadcasting program that we're using. You can't really see each other's questions, but I'll be sure to read every question that I see. We're going to talk about one strategy today, and then maybe we can go live if you'd like. Maybe we can go live. The first question is, can I go over the 1, 2, 3 setup? If I go live, I'll go over it. And I think I will be able to go live and go over some charts. But that's not the strategy that I'm going to cover tonight. Tonight, we're going to talk about how to spot tops and bottoms with tactical precision. Okay? And let's see if we can advance the slides now, right? Okay, I don't need to introduce myself. Amber was kind enough to give me that introduction. Just a disclaimer to let you know that you can lose money trading. In fact, most people, I lose money every single day, right, on some trades. So it's not about being right or wrong. I'm wrong at least half the time, and I tell my students, all my students, the same thing, that I'm wrong half the time. Don't follow me necessarily blindly. But when I'm right, I capitalize on it, right? I make my winners much bigger than my losers. I'll show you that later. The other thing to be aware of is whatever we discuss tonight is just for information, for educational purposes only. I'm not a licensed professional to be making recommendations. So just keep that in mind, please. Topics for tonight: the best time for gaining an edge. And there is truly that moment in time when the reward to risk is the absolute highest on the chart. So we're going to talk about that moment in time when your edge is, or when your reward to risk is the best it's ever going to be. And the most important thing, I think, is not the strategy that I'm going to teach you. It's more how to think and trade methodically, right? And I'm going to use climactics as my strategy. But this applies to everything, anything and everything that I trade. I try to trade in a very methodical, step-by-step, systematic approach. This way the market can't trick me. In fact, it's not the market that tricks us typically. It's ourselves, right? We trick ourselves. It's so that my mind and emotions don't trick me. I want to trade in a very methodical, step-by-step approach. And I highly encourage you to do the same. And then I'm going to also show you how to write this in your trading plan. Some of you have trading plans. Most of you probably don't. You really do need to write a trading plan that describes exactly what you do every day. This way, it's not up to you. It's not up to your emotions. You have a specific plan that tells you what time, from the time you wake up till the time you go to sleep, pretty much. Is this being recorded? Yes. Moses, I can't see anything. Not sure what to tell you. Moses, can you please log out, log back in? And Prosperous, while you have a very nice name, I'm sorry you can't see the screen. You might have to look for the recording. So it'll be available tomorrow, I think. Because you logged out, logged back in, but you still can't see it. So sorry about that. Okay. Okay, and Amber is going to help me field some questions so I don't keep interrupting the presentation. Okay, great. Thanks, Amber. If I see a question about trading, I'll answer that. But otherwise, Amber is going to help me field some questions. So again, the three topics are the strategy I'm going to teach you. More importantly, is how to think and trade in a very methodical way. And then last thing is how to write a trading plan. Okay? All right, so let's do that. The first thing I'd like to ask you is, this is a climactic buy setup, right? And let me see if I can pull up my laser pointer. So here's my laser pointer. This is a typical climactic buy setup. Not necessarily great, but wasn't that bad either. The question is, if you were to like define what a climactic is, what would you say to somebody that doesn't know about technical and about chart reading? What would you say? What would you say that climactics are, or what would you say a climactic stock is? A massive move. Is that a sufficient definition? Like a massive move? Anything that puts in a massive move is climactic. Trend reversing. Anybody else? Last gasp move. volume, straight up or down. Not enough. Straight up or down are not necessarily always novice. Climactic. Wide range bars, accelerating move, exhaustion. Exhaustion is the perfect word. If you were to use one word, it would be capitulation or exhaustion or acceleration. Hey, Arthur. Large price bar, exhaustion. Yep. Increased volume on the last bars. Yeah, that's pretty good. For me, if I were to just use a few words, let's see again how I can advance the slide. Okay, if I were to just use a few words, I would say it's a parabolic price acceleration to the point of exhaustion, where you have extreme fear or panic, right? Or extreme greed. When the stock reaches that state or stage, it almost always goes the other way. Okay? Sometimes it doesn't. Sometimes, let me bring this up, but I need my my pen. So is this climactic? Let me ask you this. Is this climactic at the bottom? I'd like it to be in black, but let's see if I can get it to in color black. Perfect. Is that climactic there? Is that climactic at the bottom? Yes or no? No. Ronald? Anybody else? No. Why not? No. Why not? Why not? So here it is. Bearish consolidation. See, don't see all the time frames, so you don't know for sure. Okay, that's a fair answer. That's a good answer. That's the best answer. Did not reverse. Okay, let me just tell you something here. No, it's not controlled selling. This is not controlled. This is climactic. This is climactic. The thing is, let me ask you something. Does a stock have to always bounce? What if buyers don't show up? The stock, a lot of sellers panic out of the stock and they sell, but the buyers don't show up. Nobody's showing up. Does the stock really have to rally? Does it have to rally? Will it rally? No, it won't. So I have seen, if I can erase all of this, I'm not going to, here's the eraser, all ink on the slide. Perfect. I have seen really great climactic, just like this, almost, just like this, that go sideways and then continued lower. That went sideways and then continued lower. And then it's not that it didn't go climactic, it did, or they just didn't rally at all. It's just that buyers don't show up. So you have to have the extreme fear, greed if it's a climactic sell setup, right? But you also have to have the buyers or the sellers to show up also. 9 out of 10 times they do show up. In fact, more than 9 out of 10 times they do show up. That's a good news. Okay, so let's continue here. Let me show you another climactic where here's your 1, 2, 3, but this is a breakout where the stock broke out, went up, 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 up. See this? Look at the move here. $27, right? Started the day at like 24. This was not a base. The stock was actually moving, but because of how big this move was, it squished or crunched those bars to make it look like a base breakout, like a clean base. It wasn't. So what I'm saying is this was a really, really huge move. From 24 to 27, that's $3, almost 10%, almost. That wasn't climactic at all. Now, this is actually pre-climactic. This is what's known as pre-climactic. When it starts to go vertical like this, that's when it's climactic. And you just need an entry. You basically just need an entry. I'm going to teach you how to do that, all of this. Okay? But notice the run up there. There are, I would say, 4 ways in which stocks go climactic. The first one being the easiest, which is the waterfall. Falls vertically like this. See this? That's by far the easiest. I call that the waterfall. The second, which is most common, is this, where the stock is grinding really, it is selling off really hard, but did it go climactic? Is it climactic yet? What do you guys think? Is that the second drawing here? Is that climactic? No, it's not, right? It's not. Why not? If you say no, which you all did, except for one person, why not? Yeah, it needs to accelerate, right? It needs to accelerate. So you need to see that little bit of acceleration. That's even just a little bit, but you have to accelerate. And I call that the grind plus acceleration. The third way is this way. Stock goes climactic, but instead of bouncing, it puts in a breakdown like this, and then the breakdown is followed by an inside bar, and then it goes higher. That's what I call the breakdown with no follow-through, climactic. A lot of people think, well, I'm not going to play it long here. Look at how it's based, and there's going to be resistance. Nope, this is actually, I have the highest odds, the highest batting average on the third type of climactics. This is the third type, and I have the highest batting average on it. When this sets up, it's almost a guarantee. For me, it's almost a guarantee. The key thing is, you have to already like it here. If it looked good here, then you can do the breakdown with no follow through. If it didn't look good there, then you shouldn't do the breakdown with no follow through. Okay? And then the fourth, which is what we've been getting a lot of, is the news, where the stock is going about its business, going sideways, and then out of nowhere almost falls apart. Right? It's really important that you don't play something like this long, because that's not climactic. That's just one vertical move, igniting move. Now what happens is you typically get a bounce, and then it almost always fails. Now if the stock starts to go sell off again, and the bars get bigger and bigger like this, progressively, then you can play it, right? Then you can play it. And that's what I call the news, or the newsy climactic, right? Those are the four ways in which stocks go climactic. There's one other way, and that's the nano-climactic, and that's on the smaller time frames. It's not climactic on the larger, but just on the smaller time frames. The small consolidation in the last drawing provides the best guide where to exit the trade if you're wrong. Yeah, I mean, I would say so, right? I agree. Okay, so those are you have to be familiar with these four ways in which stocks go climactic. You also have to, a perfect example for thinking about climactics is this. If you were to drive a car and you drive it at, let's say, 80 miles an hour, and let's assume, you're driving an electric car, you don't need to stop, and you have enough battery to take you from, let's say, west coast to east coast. Can you actually get there going at, let's say 60 miles an hour, non-stop? If gas was not an issue, if getting gasoline or whatever, or recharging your car, can you actually get there from west coast to east coast going about 60 miles an hour? Newish car, like, relatively new car? Yes, no problem, right? No problem. Most cars can do that without any issues. Now, if you start out at 60 miles an hour, and then for every mile you drive, you actually go faster by 5 miles per hour. Can you get there? Will you actually get there? If every mile, you increase the speed by 5 miles per hour, will it work? Nope, right? It won't. That's the thing about climactic. The acceleration, and then it just runs out of fuel, so to speak. Or the engine blows up, so to speak, right? So initially, it's going at 60, 70, 80 miles an hour. That's sustainable. See this? The second example, that's 80 miles an hour. That's like 80, 90 miles an hour. That's sustainable. You should never play against it. But if it starts to accelerate, that's when you look to fade it, to play against. Again, just be patient with me, please. I'm going to show you all of this in a step-by-step approach. Just be patient. All right, so I'm just catching up on what's the first time frame. I'm going to go over the time frames in a little bit. So let's continue. This is just kind of to show you an example of what a climactic looks like. These are all things that I played, right, in the room that were called, and I'm trying to go next here. Okay, see if I can go next, please. All right. Okay, this is picture perfect. See it? If I were to ask you what type of a climactic was this out of the four, right? What type of a climactic was this? One, the waterfall, the grind plus acceleration, the breakout with no follow through, or breakdown with no follow, and then the news climactic. Which one of these would these be? I'm seeing twos. I would say that's the waterfall. Now I understand why you would say that's, here's the uptrend and here's the acceleration. That's true too. So I guess one or two is okay. But the whole thing is just, to me, that's more like the waterfall. Of course, that's not a waterfall. It's the opposite of a waterfall. I don't know what you would call it, right? But yeah, one or two. Exactly, one or two is fine. Perfect. Now notice this, just such a beauty, right? This is how you can tell um, this is how you can tell whether a rumor is true or not. If you watch or listen to the news during the day, there is actually a way, almost a foolproof way, to know whether a rumor has teeth to it or not, based on the way the stock rallies. If the stock does this, the stock is, you're watching it, some news comes out, it pops, and it just bases, or it doesn't, that's, if that happens, the news is probably true, meaning the news that this stock is a buyout, or the news is true. Now, if this happens, where the stock pops and then starts to grind like this, the news is likely false. You can always fake that. So the news was, this is new one actually, the news was Intel was going to buy it, right? How do you know it's not true? Because the bars are increasing, bigger and bigger and bigger. What does that mean? It means novice people are being drawn to it. If it's true, I assure you that professional institutional traders don't leave the novice people any chance to get in it. They just do it. This is what happens. Bam, and it stays at the highs. Mostly stays at the highs. Sometimes comes in, goes right back up. Every now and again, I see a news climactic intraday. Somebody posts the news, a play that just pops or drops, and I tell them, be careful, this is probably real. The next day, the stock is, the news is public now. It's real. But if you see that the stock is going up slowly like this and starts to accelerate, puts in big bars, you can be sure the news is not real, and it can be faded lower. So that's what that was. So you have to see how the stock trades, right? You have to see how the stock trades up or down. Okay, just showing you some examples, really just some examples. This was a rare climactic because this was played long and it turned into a climactic sell setup. So a rare climactic buy setup, which I'm not showing because I just couldn't fit it, couldn't make it fit on the same page. Long, and then the stock goes nuts and goes the other way. EXC, right, is the symbol. Short, right, the long I'm not showing. Look at it. And it goes to 90 bucks. Basically a $25 move on the same stock, up and down. Perfect. Now, if I were to ask you which one of the four is this, you should all be able to tell. This is called the pre-climactic, by the way. This is number 2, right? Up, and then accelerates. That's number 2. Does that make sense? So not climactic until it starts to go vertical, then you look for an entry. Now we're going to talk about the entries later. And that was the entry at the top. Okay, so just some examples for you. And then now we're going to get into the nuts and bolts of it, so to speak. And get, and after showing you some examples now, I hope you understand more, you know more about climactics. Now we're going to talk about the different types. There are primarily 2 different types. Now I taught you 4. I went over just 4, but there are they can be broken down into 2 main climactics. One is called a mini climactic, where the daily is just an igniting bar. Like this, the daily is today's bar is the first bar in this direction. Only one red or green bar, right? So you might, or sometimes you see something like this on the daily chart. Bam, breakout. And I'm trying to short it here. Now you might say, why would you short something like this? And that would be a really legitimate question. Why would you short something really bullish like this? Does anybody have the answer? Why would I short a daily chart that looks like this? A brand new breakout. Most of you recognize this pattern as a breakout play. Why would I short something like this? Can someone tell me why? Why would I do it? The false move? Not really. False move, I was referring to intraday news plays. Because it has resistance? No. A stock that has resistance shouldn't necessarily be shorted. Running into major resistance? No, it shouldn't be shorted if it's running into resistance. It's because the intraday is, what if I told you the intraday looked like this? See this? What if I told you the intraday looked like this? It's because it went climactic, right? It was initially a beautiful breakout on the daily chart, and it just ran too much. So I'm fading that intraday move. Now you can see the mini climactic, you're basically going with the intraday and really against the daily chart, because the daily chart is bullish, right? The daily chart is really bullish. The intraday is not. The intraday went climactic. So the mini climactic is when you have a climactic stock, but only on the intraday time frames. This is okay to do, but you have to sneak in and out quickly because you're going against the larger time frames. We always use multiple time frame analysis at T3, right? It's important. So that's the mini climactic, and that's, I would say, the first type. The second type of climactics is what I call the full climactic, where the stock is climactic on the intraday, beautiful, right? Gets a check mark, and look at that daily time frame. Look at this. I mean, that is also climactic on the daily time frame. So the daily is showing 2 or more consecutive red bars, or just one wide range bar is okay, as long as it happens in the direction of an extended daily, meaning the daily is down a lot, and then you get the wide range bar on the daily chart. Okay, then the daily matches with the intraday. The daily supports your bias on the intraday. That's what we call a full climactic. Does that make sense? A full climactic is where you're not playing against the daily. The daily itself actually says, I'm done, right? It's reached extreme levels. So that's when, those are better. Those are much better. Now, how often can you find these? I mean, you can find them. Almost every day you can find one or two. But you can't, not always. You can't always find them, right? And the mini climactics are just fine. I mean, especially right now it's earnings season. So a lot of stocks report earnings, and and every stock almost reports earnings this month in a matter of 4 weeks, in the next 3 weeks or so. And then they go climactic a bit every day, right? So those are not the gapping stocks. The gappers are not going to be full climactics. They're going to be mini climactic, but they're still okay to do. So now again, now that you know about climactics, the mini and the full, I'm going to teach you the process that I follow, right? And the process is this. I ask myself a few questions, just a couple questions really, and based on that, that will determine my entry and my target, okay? Based on those questions. Now, I don't really ask myself these questions during the day. I see it and I recognize it immediately, right? It's like, it's like when let's say you're walking down the street, you run into your friend, your really close friend. Do you stop to think, oh yeah, is this David? Is this John? Is this, yeah, he's about 6 feet tall, blue eyes. No, you just know them. You know them instantly. You don't think. The same way in trading. After a while, you don't think. You see and you recognize immediately. So I don't really run through these things, like this, but that's the process. And the first question I ask myself is it full or mini based on the data chart? So here I'm showing you the 1 minute, the 5 minute, the 15, and the daily. This is the daily chart, okay? Now I do also use the 2 minute chart, but I wasn't able to fit, I didn't want to try and fit 5 charts on the same page. Just 4 is enough, right? So I asked myself, is it full or mini, right? Does the daily support my bias on the intraday time frames? If the answer is yes, then target 1 is the 20 MA on the 5 minute chart, and that's the 20 MA. The blue line is the 20 MA. The black is the 8 period moving average. You can ignore that. That's for scalping. And the 200 period moving average, all simple moving averages. So again, the first question is it full or mini? If it's full, then target 1 is the 20 MA on the 2 minute chart. Target 2 is the 20 MA on the 15 minute chart. I don't mean the stock has to go up and touch the line before you exit. Once it gets close to the moving average, I start going bar by bar on the 1 minute chart, trailing my position 1 minute bar by bar. or sometimes I'll use level 2, depending on how the stock is trading. Okay, but that's the target for full climactic. Is target 1 is the 20 MA on the 5, target 2 is the 20 MA on the 15. If it's a mini climactic, you're going against a bearish daily chart, then the targets must be smaller, right? Target 1 is the 20 MA on the 2-minute or 1-minute chart, right? You have to look at it on multiple time frames. So oftentimes I will use the 2-minute chart as target 1. Most of the time, actually, 2 minutes, not the 1 minute. Target 2 is the 20 MA on the 5-minute chart. So much smaller targets for mini climactics. All right. The second question I ask myself is, is the 5-minute chart. Does the 5-minute chart look picture perfect? Obviously, a lot of you don't know what a picture perfect chart looks like, and I don't mean that, of course, in a bad way at all. But I mean those of you that are new to climactics really don't know what a picture perfect 5-minute chart looks like. And this is something that we teach extensively. But basically, you want to see the bars progressively bigger, right? Bigger and bigger. You want to see big volume far away from the 20 MA. So extension, acceleration, volume. You want the stock to be capitulating, basically. If you have that, if you get that, that's what we call, that's what I would say is a picture perfect time frame. Now, in trading, the most important question you can ask yourself and ask others if you're learning from somebody is why. And if that person can't answer you, then they don't know what they're talking about, right? So you always have to ask why. But why the 5-minute? Why not start with the 2-minute? Why not start with the 15? If I was listening to somebody say start with the 5-minute, the first thing that would come to mind is why the 5-minute? And I'm going to tell you, the 5-minute for me is the perfect time frame for playing climactics, because it's not too short, too small like the 1 and the 2, where it's just a lot of noise and you can get sucked into a play based on the noise. And it's not a long time frame like the 15-minute time frame, where it takes a long time, 15 minutes for just one bar to finish forming. By the time you get into your play, it's already gone, right? So by the time, the play sets up, it's already moved up a lot or down a lot. So the 5-minute is not too short, not too long. It's the perfect time frame to look at, to start with. So I asked myself, does the 5-minute chart look picture perfect? If the answer is yes, then I want to get aggressive, and I don't want to wait for the 5-minute to trigger. When I say to trigger, it means to take out the prior bar's high. I want to go to the smaller time frame and enter over the 1-minute bar's high. Stop the low of the day. If you think you're getting into something that has, you're catching low of the day, then don't mess around with the stop. Just put it under low of the day. Don't try to get too cute with it and raise the stop, and just make sure you put it under low of the day, right? Because you're catching the bottom, you're catching low of the day. So again, if the answer is yes, the 5-minute is picture perfect, then I go to the smaller time frame. I look at the 1, and if the 1 doesn't provide a very clear entry, then I wait for the 2-minute bar to finish forming, and I play above it, long, with a stop under low of the day. If the answer is no, the 5-minute is not picture perfect, then I don't go to the smaller time frames and get all aggressive. It wouldn't be proper. I back off and I look at the 15-minute time frame, and I ask myself, does the 15-minute chart look decent? Does it look good enough? It doesn't have to be perfect on the 15-minute chart, but does it look actually okay? If the answer is yes, the 15-minute chart looks good, then I go back to the 5 and I wait for that 5-minute bar to finish forming, and then I play above it long with a stop under low of the day, with the targets, since this is a full. Target 1, and that's really target 2. Notice, I'd be out right here. It's close enough. I'm going to take it. And then on top of all of this, even though I have a very, very well-defined, simple, but very well-defined step-by-step approach, I'm not a robot. I have to use my brain. So if in this case, let's say the 1-minute didn't provide a good entry and the 5-minute bar had already finished forming, and I can wait for, just wait 2 more cents and I can use entry, I'm going to wait and use the 5-minute. So you can, we talk about a lot of people talk, a lot of people that don't know anything about trading talk about trading plans as though they are a protocol that should never ever be broken or violated, right? It's as though it's a nuclear weapon and you should always follow every single thing to the T, to the letter. No, then they don't know anything about trading. Trading is more like something that's moving, that's a river that's moving, and you have to flow with it. That's what trading is. So you have to bend the rules a little bit sometimes, and it's not bending, it's really adapting. It's adaptability, right? You have to be able to change, you're not trying to self-sabotage or anything like this. You're just not following exactly your trading plan because based on the market conditions. You're just, right? You're flowing with it. All right, so does that make sense? So the process is it full or mini? So the first thing you look at, and in order to tell whether something is full or mini, you have to look at the daily chart, right? You have to look at the daily chart. And if it's full, then the target 1 is the 20 MA on the 5. Target 2 is the 20 MA on the 15. If it's mini, then the target 1 is the 20 MA on the 1 or the 2-minute chart. You have to look at multiple time frames. This is there's a whole chapter that we talk about in the class about multiple time frames and how to use the multiple time frames. So target 1 is the 20 MA on the 1 or the 2, and target 2 is the 20 MA on the 5-minute chart. So much smaller target. And then the second question is, look at the 5-minute and ask yourself, does the 5-minute chart look picture perfect? If the answer is yes, then go to the 1 or 2-minute chart and enter above the prior bar's high with a stop under lowest day. If the answer is no, it's not picture perfect, then don't go to the small time frame. Look at the 15 and ask yourself, does the 15-minute chart look good? If the answer is yes, then you go back to the 5 and you enter off the 5. If the answer is no, the 5 is not picture perfect, the 15 isn't that good, then no play. Then no play. All right? And that's it. And management is all or nothing to target 1, meaning you don't touch it unless it gets to target 1 or stops out. And then the back half, once you get out of half at target 1, the back half is managed on 5-minute significant pivots until about 80% to target or 75% to target 2, then you go bar by bar on the 1 minute. All right, let me see if I can catch up on some of the questions here. Thanks for your patience. I was just didn't want to interrupt myself here. Did I get a PM or something? No. Okay. Let's see. You get in with a buy stop. Yes. I get in with a stop limit order. I always get in with a stop with a limit order, not always a stop limit. Sometimes I'll put my entry in the system, but sometimes I'm just going to hit it manually. I have hotkeys, so I can just, with the press of a button, get into a stock. All I need to specify is the share size. And then I press a button and then I'm in. I don't want to be going like this. Oh, let me click here and let me click there and then buy. And yes, confirm. Let's press yes on the confirmation pop-up message. No, by the time you do that, it's gone. You have to make sure you trade like the professionals do, with hotkeys, right? Really fast, in and out quickly. And then I always use limit orders. I don't use market orders. Market orders are for novice people. Now, that doesn't mean you can't use market orders. You can. Sometimes I have an escape. The escape button is programmed to be a market order. So if I have a position and I quickly want out and I know it's really liquid, market order, escape. The escape button, you escape, right? So that's programmed to be my market order, close position. And then I have another market order for closing half the position sometimes. So yes, you can use them, but talk to anybody that knows, that knows how systems or how market makers and specialists process orders, and they'll tell you that market orders always, or limit orders always take precedence over market orders if they are sent or received at the same exact time. Because the market order says, fill me at any price you want. Of course, they're supposed to fill you at the NBBO, the National Best Bid Offer price. Does everybody follow the law and the rule? No. The limit order says, if you don't fill me now, you might not have my flow, my order flow. So a limit order will always get filled first if they're sent at the same time. So I always use a limit order, okay, for everything. Entries, exits. You might say, well, how do you use a limit order for the exit? What if you don't get filled? That's why I use a wide limit, a very wide limit, to make sure I always get filled. All right, so there's that question. Do you wait to enter after the 8-day crosses? No, after the 8-day crosses the 21-day. First, you shouldn't be using the 21-day. I mean, I'm sorry, I shouldn't be telling you what you should and shouldn't do, but the 21 MA is just, it's Fibonacci. Most people use the 20 MA, not the 21. So I would just use the 20 MA so you can see what most people are seeing, because that's who you're trading against, right? That's who's on the other side of the chart. They don't use the 21 MA. But no, I don't wait for them to crisscross. If you do, it'll often be too late, most of the time. All right, let's see. Are your targets usually based on moving averages? Yes, as I explained, always based on moving averages. Now, good question there. What if there's nothing to the left? There's no resistance at all to the left here. What if there was nothing at all to the left? Does it mean that, I will always exit there? No, I won't. Maybe I'll trail it bar by bar. And guess what? I'm out here, right? There's no resistance. So I always also look to the left, because moving averages and resistance often will coincide, almost always, but not always. Oftentimes, I should say, not almost always. Often will coincide with resistance, and I use the moving averages. Moving averages are a wonderful tool to use, especially when you're going counter trend, right? Especially when you're going counter trend. But yes, I will often look to the left to see if there is real resistance there, price resistance or not. Okay. Can I show what's not a perfect? I'm gonna show you. You bet I'm gonna show you what's not a perfect 5-minute entry. Yes, I will. I'm gonna show you a bunch of examples here. Now, let's see. Are we recording this? You got here late. Yes, we are. Doug, we are. What's my scan criteria for finding climactics? To tell you the truth, I don't even scan for them. You know why? Because I have over 200 people in the room with me trading. There's like at least a dozen people that are actively scanning for climactics. So I don't need to waste my time scan for climactics. I scan for other things for the room. But there's so many people that scan for climactics, and I don't waste my time. Now, if you're asking, well, but how do I scan for them if I were to scan and I'm not part of it? The best way to find climactics is by being part of a room, right, where people post news items, right, stuff like this. That's the best way to find climactic. And because I am a climactic specialist, I specialize in these. I specialize also in gapping stocks and scalps. So I specialize in 4 different things, by the way, 4 different things. One of them is climactics. And I've taught this strategy to a lot of people in the room. And we have a lot of people that scan for them and find them every single day. Like, we're talking a dozen plays. A dozen plays. Sometimes the stock is too wild to trade, so I don't do it. But sometimes it isn't, and I will do it. But if you're not part of a room, there are probably 3 or 4 different ways to scan for them. One is by buying a scanner, like Trade Ideas. Go to tradeideas.com. They have a scanner, and you can customize it to find those climactics, right? But they already have a pre-built scan for climactics. And you can tell them, well, no, I want 5 red bars in a row. I don't want 4 red bars, and I want the 5-minute chart, right? And they will customize it for you. Another way is to have access to a wire, a news wire, where these things are, are posted for you. And you can find those intraday news climactics a lot, right? A third way is by scanning daily charts. After the close, you go over your trading universe, your stock universe, basically the list of stocks that have acceptable volume and price requirements or parameters, and you look at them and you scan for things that look really extended to the downside, like maybe this one was, or here. And then you put them on intraday charts and wait for them to go climactic. And if they do, then wonderful. If they don't, then no play. What else? And then again, the best way is to be part of a room. Oh, there's one other way, which is marvelous, and that is by using a high-low ticker, a new high or low ticker, new intraday high, new intraday low. And if the stock keeps showing up on that ticker, if you have the Fusion platform or Lightspeed platform, those have it pre-built, built in, right? Built in. So if a stock keeps showing up on that ticker as, you know, as a stock that's making new highs, new highs, new high on the day, then you can look it up. And bam, it's often something that's going climactic. So there's, like I said, 4 different ways. Do I use mental stops or hard stops? Most of the time, hard stops. Okay, most of the time. When I'm trading my position, mental stops. When I'm trading my position, it's not mental. It's just like, you know, I'm waiting for the bar to finish for me, and I'm raising my stop, and I'm out. You know, and I just hit it with a hotkey. Lots of questions here. I hope you guys, the rest of you that are waiting for me to continue with the presentation, I hope you don't mind that I'm answering the questions here. I think we can all learn from questions. As far as what moving averages these are, who just asked? Somebody just asked. Vincent. The 8 is the, the black is the 8 period moving average. The blue is the 20. That it must be on every time frame. And then the red is the 200. I should have labeled the moving averages. 8, 20, and 200, all simple moving averages. Let's see, where else am I? This seems like counter trend. Yes. Is this the best? Is counter trend trading the best? Well, Mike, it just depends on your style. I have people in the room that have been trading for over 10 years, and that's the only thing they do. That's the only thing they do. And yeah, and some people, they would never do that. So it just depends on your style. The single most important thing in trading is to figure out what your personality is, what your style is, and to actually dedicate yourself to that, and not get distracted by everything else that moves. Right? That's hard. It requires discipline, but most importantly, it requires knowing yourself. Right? Knowing yourself. That's the single most important thing. It's like, you know, when I was going to college, I had a very hard time picking a major. I changed my major 5 different times. Right? And and I just couldn't figure out what I wanted to do. That's not good. So in trading, you really, the first few months, if you're starting out, should be really dedicated to experimenting, meaning you play with a small, you know, the smallest size possible, 1 or 2 or 3 shares, and just experiment with the different strategies, the different setups. Now, if you just experiment like this without any education or knowing what it is that you're supposed to look for and what you're supposed to do, and you're just kind of randomly trading, it will take you nowhere. I've seen people trade randomly like this for 10 years and never make a dime. And you might say, well, why did they continue? It's because it became part of who they are. You know, a losing trader, but at least a trader, somebody that just trades. So you don't want to do that. You want to approach it in a very professional, methodical way. You don't think, well, let me become a dentist by just, you know, experimenting on something, on a corpse. Right? Nobody does that. You know, let me become a pilot by flying my dad's plane or something. Let me become a doctor by, you know, you see what I mean? It's only in trading that people think, you know, that they can do it. They can take money away from the professional people that have been doing it all their lives, have staff, unlimited resources, computer systems, and they think they can go into the market and take money away from them just like that. It's never going to happen. I mean, unfortunately, it's never going to happen. You have to get the education, become really serious about it, approach it in a very professional way, very methodical. Then, yes, then the potential, then it's possible. Without that, it's not really possible. Doesn't matter how smart you are. All right. Is climactic all your trade? No, that's not all I trade. This is one of the 4 things that I specialize in. Actually, it's not the first thing that came to me naturally, meaning that's not my bread and butter strategy. right? It became maybe my bread and butter, or one of the really main things that I do because of how many people in the room, play them and find them. So they find incredible climactics almost every day that I just started to play it a lot. Otherwise, this is not what I gravitated towards when I first started trading. Okay, gaps is what I do the most. All right. Let's continue. And there's like a couple other questions that I think Amber is responding to. So, all right. So no, let's go back. Sorry. Let's go over this one first. Yeah, let's go over this one. Okay, just erase the. Oh, I thought I did. Okay, so let's go over this. All right. Let me just delete the rest of it. Sorry, 1 second. Erase all ink on the. Okay, great. So, is this a full or a mini? I'm gonna consider it a full climactic, even though it only has really one red bar. Typically, you need to have more than one red bar in a row on the daily chart before you can consider something a full climactic. But look at the size of the bar, right? Look at the size of the bar, 22 to 19, huge. It's like 10 times the size of the average bar, right? Far away from the 20 MA. Oftentimes they snap back, especially if the 20 MA is flat. If you have a flat 20 and you have a big drop away from it, almost always will snap back. How much will it snap back? We don't know. But it will almost always snap away. It snap back to it. Okay? So I'm going to consider this a full. It's not always a clear-cut answer. I mean, it's not always very easy to tell. But I'm going to, given the size of the bar, given the flat 20, given how far away it is from the 20, and given the fact that it actually started with a sell-off a couple of days ago, right? I'm going to consider this a full, which means target 1, 20 MA on the 5, target 2 is 20 MA on the 15. Now, I look at the 5-minute and I ask myself, does the 5-minute look picture perfect? And the answer is yes. If you know climactics, you know this to be picture perfect. That's like the waterfall and the vertical drop. Notice the biggest volume bar didn't come at the end. That's okay. We like it to be we like that big volume bar to come at the end to basically tell us that this is the puke out bar, right? The capitulation. But sometimes the stock will drop a little bit more, but once you get that wide range bar, big volume, it's over. If the 5-minute picture perfect, my plan says to go to the 1 or the 2-minute chart and enter above the 1-minute bar's high, stop under it, and again, wait for targets. Don't all or nothing management. Don't do anything unless target 1 gets hit. Now, again, when the stock starts to get close to target 1, I go bar by bar. I go really tight on the 1 or the 2-minute chart, bar by bar. And target 2 is the 20 MA on the 15 is basically up here, up, and it's starting to take out the prior bars low. I'm going to get it. I'm going to get out, right? I'm not going to wait. Close enough, I'm going to go bar by bar and then just get out. So this got to target 1 and to 70% to target 2. Pretty good. Next one, full or mini. Here again, this is a gap trade that you might think is, you might say, well, that's a bullish daily chart. It's not that extended. It's a mini, not full. I'm going to treat it like a full. Why? Because this is flat 20, as I said. Whenever you have a pop or a move away from the 20 and it's flat, it comes right back down, almost always. The stock moved up already a couple of days ago. This is a continuation move, and in 30 minutes, look at the 15-minute chart in the bottom left, this chart. In 30 minutes, in 2 bars, it moved $3. So I'm going to treat this like a full climactic, even though this could have been also treated like a mini. And then, so I'm going to say full, 5-minute picture perfect. No, that's not picture perfect. Yeah, there's a long question here that I'm going to get to, but let me finish this, please. That's not picture perfect. The stock is actually almost facing at the high. Now, does the 15-minute chart look good? And the 15, as I said, looks good. 2 huge green bars in a row, $3 in a matter of 30 minutes. That's almost a guarantee to come back in. So the 5 minutes is not picture perfect. I'm not going to look at the 1 minute or even consider entering off the 1 minute. I'm going to look at the 15-minute chart. And if the 15 looks good, then I'm going to go back to the 5 and enter under the 5 with a stop above it. Okay, and since it's full, that's target 1. Notice the stock didn't really trail. So if you kept your trail, you probably got out right there. And that's also target 2. But look, I mean, just think, will it really negate the entire move up? I mean, it negated about 60, 70, 80% of it. Let me clean the, let me erase everything here. And then I'm going to start using the laser pointer so I don't draw all over the chart. Look at this. Just think, is it really going to get to the 20 MA on the 15-minute chart? No, it's not. Look, huge move up, a huge drop. Will it take it out also? Is that what, is that reasonable to expect that it's going to take out low today and continue lower? No, that's not reasonable. So I'm going to get out right here, even though per my strategy, the target should be the 20 MA. That makes it, you have to think. You have to think. Here, just a comment. Even if the 5-minute was picture perfect, notice that the 1-minute chart provided no clear entry. So defer to the 5. Enter off the 5. All right. Let's see. Okay, let me read that question. Oh yeah, Amber already responded. Okay. Let's continue. Next one. Full or mini? Notice the stock gapped under a green bar. That's mini. That's not full. That's the daily basically is not extended to the downside, right? This is a brand new move. Today was a brand new move. That's not a full. That's a mini. The next question, does the 5-minute chart look picture perfect? If that doesn't look picture perfect, then I don't know what does. That is as picture perfect as it gets. Look at the bars, consecutively bigger and bigger, right? All red, huge bar, huge volume, picture perfect. Yeah. Does volume play into my entry? No, it doesn't. But volume helps me spot the end, meaning it helps as a confirmation that this is the bottom, but it doesn't play into my criteria. It doesn't. So if the 5 minutes picture perfect, enter off the 1 minute. Since this is a mini, target 1 is right here, 20 MA on the 1 or the 2-minute chart. Target 2 is the 20 MA on the 15. But I know better. I just got it right here. I mean, I got it, let's say, at 32.80, and I want to take target already 20 cents later? No, I know better. That's going to be my target 1, and that's going to be my target 2. You see what I mean? So you have to, you have to think. You have to think. So target 1 is that I'm going to treat it like a full. The other thing to know about it is this, is if you have a fast, sharp sell-off that goes through, I didn't say it stops at the 20, that goes through a nice 45-degree 20, 100% of the time will snap back. Now, I don't want you to believe me because there's nothing that happens on 100% of the time, 100% basis, right? But almost 100% of the time. Again, what did I say? I said if you have a nice 45-degree rising 20 and you have a fast, sharp sell-off that goes through it, it will always snap back. It's just a matter of when, not if. So I see on the daily chart, nice 45-degree 20, and the stock gap down went through it, it's going to snap back. I know that. And then look at the intraday. Perfect. So treat it like a full, even though it's a mini. This is as good of a mini as it gets. Target 1 out here half for sure, and then out the back half up here. See this? Up here. All right. Okay. Okay, so the CPHD, I don't have my charts up. We might go live if we have time, and then I'll look at the CPHD if you'd like. So that's a mini. And then now I'm going to have a quiz for you. But let's take a short break. I need a short break. And then Amber's going to, oh, let's see if Amber's around. Sorry, Amber. Let's see. 1 second. Let's see if she's around. Okay, on the last slide, what's the question? Okay, Amber's around, but let's see what the question is. There a question on the last slide? Oh, CPHD, this one. Oh, I'm sorry. I thought you meant from today. This is not from today. Um, Beautiful entry, but it's only 1.5 hours to target. Is it worth it? It's not 1.5 hours. Okay, it's 33. Stop 32.60. Let's say 40 cents. 33.50 is target one, right? That's more than an hour, and target two is almost 34, 33.80. So it's definitely not 1.5 hours. Okay, Al? But you're right, the stop wasn't the tightest one in this case. But this is something that I would be, I'd feel, 100% sure about. Maybe you should never feel 100% sure about anything, but this is something that when I see something like this, I almost feel 100% sure about. We're going to do a quiz in a few minutes here, but I'm going to bring Amber on the mic. She's going to tell you about our current promotion, I guess, and I will, I'll be back as soon as she's done. Okay, we have a lot more stuff to go through, and then I'll show you some of the more recent trades, like today, yesterday, the day before, and maybe we can go live. But here's Amber. Amber, all yours.
Thanks, Sammy. All right, so I'll get back to him as soon as possible, but I wanted to um, come on here quickly. I have seen a couple questions I want to go over. Yes, we are recording it. We will be sending out the recording tomorrow. You can also email info, I-N-F-O, at t3live.com if you do want to request the recording personally and have it sent to you, or if you want previous recordings. I've seen someone else want a previous recording that Sammy had done. Again, you can email info at t3live.com. I do want to quickly go over an offer that we do have. Two different options, actually, to follow Sammy in the Black Room and to take the T3 Technical Strategies Lab. Let me show you what I got here. Let's see. All right, can everybody see my screen there? Perfect. Okay, so those of you that have known Sammy before, you know that we were with Pristine. This actually used to be the Trading the Pristine Method course. This course was actually how Mr. Scott Redler got his technical background some 20 years ago. He took the Trading the Pristine Method course when he was first starting trading. Actually, he took it with my father-in-law here in White Plains, New York, and we've all seen where he's gone from there. So it's the same material, it's a different market, but that's what makes it so great about what we teach and what we do, and how Sammy trades and how my husband trades this method is that it does not matter if you trade stocks on a 1-minute chart and a 2-minute chart like Sammy, or you trade Forex on a daily chart like my husband. It is universal. You are trading fear and greed. You are trading human emotion, and that's why it does not matter the time frame, the instrument, the chart that you're trading, a chart to chart, and it's universal. So I put these two options together. One option, option one, is the T3 Technical Strategies Lab that will next be held November 7th through the 11th from 4:30 p.m. Eastern to 7 p.m. Eastern Time. It will be recorded, but it is a few hours a day over those 5 days. If maybe you're a swing trader, you don't really need a day trading room to follow, you can get it at a discounted price of $6.95. No rooms, no bells and whistles. You get the lab, the recording, and the 274-page course manual that goes along with it. Option two is if you were to subscribe for 6 months of the Black Room, actually even that at a discounted price. Normally it's $195 per month. At 6 months, it would be $11.70. We brought that down to $9.95. You get 6 months of the room, and you can attend his lab for free. Actually, my husband, Kurt Capra, will be teaching this course in November. Him and Sammy alternate teaching these, so it's the same methodology, strategies like the climactics. You'll also learn the standard buy and sell setups, the breakdowns and breakouts, 180s and 123s. Those of you that know those strategies, it's all taught within those 5 days, so you'll get to take it with Kurt, and you can even retake it with Sami next time he teaches it to get his point of view, especially if you're following him in the room. So there are two different options. Again, option one, just the lab at that discounted price, and option two, 6 months of the room, and you get to attend the lab for free. So if you are interested or want us to hold your spot even, email info@t3live.com. You can have the subject line as option one or option two, and we will get back to you tonight. Get you, even if you have other questions, you just want to reserve this, you can email in tonight. We'll talk to you either this evening or tomorrow, whenever it fits your schedule, and answer your questions and make sure you're on the way. Let me see these questions here. And I just got Mark. He actually just recently took the lab, didn't you, Mark? This last time he took it. He says, please tell the group that I highly recommend the lab. For those just like Mark and Sky and our other graduates that I see in here, that come regularly, that support us, that are in the room on the daily basis, that come to every one of these webinars, the most common thing that I hear over the 7 years that I've been sponsoring this course is, I wish I would have found this sooner. I wish I wouldn't have spent all that money with these quote unquote gurus that are successful in a year of trading and think they want to teach you everything that they know, and market conditions change, it no longer works for you. This is something that's been long-standing, 25 years, technical analysis based, price action, universal timeless technicals. And again, the most common thing I hear is, I wish I would have found this first. So take this opportunity. Getting through this election, we don't know, the markets could react in various ways depending on who wins. It could go good or bad either way. It's hard to predict how they're going to respond if Clinton or Trump are elected. So take this time to really learn, to dig in, take care of yourself, get through this period, and really start 2017 off on the right foot. We really guide you throughout the entire process, not only in the course, but following up in the room. Sami even answers emails on a regular basis. He's a workhorse. But this is definitely something that you can add to any type of trading that you do. Even if you have, a successful strategy of your own, this will only strengthen what you're doing. One other question here. How many people are in Sami's room on a daily basis, roughly? Vincent, roughly, I would say around 200 on a daily basis. It's not overwhelming though. There's not to where you can't keep up. It's very supportive. It's a great room in the black room. Our traders help each other out. Like you said, they scan for each other. They put out ideas. Even so there's one gentleman, Oscar, who is from South America, and every single morning and every single evening for years, he will say good morning and thank you to members in the room by name, each individually, to Sami, to myself. It's really a great support system on top of a learning process. Vincent, what time does the room start? The room starts, we get in there about 8. You can actually log in anytime after 7 a.m. See what's typing in there. Sami puts out his watch list around 8:30. Then he comes on and does a pre-market analysis from 9 to 9:30, and then we're trading live through the bell. There's actually 2 other moderators in that room, Mark Harilla and Yifan Wee, who are actually both students of mine. They were clients of mine. Over the last 3 and 4 years, they are now moderators of the room. They also started here, and now they're here, just 3 and 4 years later, retiring from their old jobs and now leading a trading room with Sami. And my husband, Kurt, he closes out the day from 3:30 to 4 with the post-market, or, ending the day analysis, what to expect for the coming days and weeks. But again, this is a very successful, highly engaging room. He gives you the entries, targets, exits with plenty of time for you to get in. I mean, he'll say, if it hits this level, get in minutes ahead. So anyone can be prepared to take his trades and be successful in the room. And that's why we have so many loyal subscribers that will subscribe year in, year out, not only in making money, but being in that community every day. Another question, when is the course? The course is held November 7th through the 11th, like I said. So just in a couple weeks, there is a course manual that comes with it. I do suggest the earlier you can enroll, the better, so you can get your hands on the material, start thumbing through it, maybe getting some questions together, and prepare for that course. Stocks, futures, the room trades stocks, Ali. The room trades stocks, but you can apply this methodology to futures. So if you are a futures trader, I would probably suggest option 1, just taking the course and applying it to what you do. If you were a stock trader, especially if you're an intraday trader, definitely option 2. For a day trade, how much does, so Vincent, for a day trade, how much does he risk? Sammy risks $500 per trade. Maria asks, what is the price of the black room after 6 months? After 6 months, you can keep that rate. So you can continue to subscribe for the $9.95 for 6 months, or we can even get you a better yearly rate as a graduate. We can give you some additional discounts if you wanted to subscribe from there. So we definitely take care of our graduates. Ronald, email me and we'll talk about that. He's just asking about an old pristine purchase he had. You're very welcome. Again, this is an amazing course. I know that people have, we offer a few different things. I can vouch for this one myself. I have seen it do so many wonderful things for my clients. I've had people that quit their jobs, pay for their children's college. I had a client of mine that was able to pay for his daughter's wedding, buy houses. And in 7 years, I've seen this really do amazing things. If you're willing to put in the work to be a successful trader, this definitely, we'll do the work in getting you there. Do we have a performance record? Actually, we do. We track all the trades in the black room. If you email info@t3live.com, we can send it to you. I think it's up to date, Sammy. He posts it all in there. He usually does it on a weekly basis. But yes, we track all the trades that are called in the black room. If you have any other questions, again, I know it's running late. I do want to get this back to Sammy. Please type in your questions. I will be getting back to you. But again, please email info@t3live.com. Don't pass this up. It's an amazing opportunity. I think this may be the last one through the end of the year. So it's definitely a great time to sharpen up on your skills through November and December, and really be ready to start the New Year's off right. One last question. Chris asks, what time of day? It's held from 4:30 to 7 p.m. Eastern Time, Monday through Friday, November 7th through 11th. So again, option 1, just the lab and the recording and course manual that is yours to keep, that you can reference back at any time, the recording as well, for just $695. That's $300 off. Or option 2, subscribe to 6 months of the black room for $995, and you can attend the lab for free. We'll even throw in a retake for you so you can take it with both Kurt and Sammy for a slightly different point of view or styling on the same method. So again, thank you for your time. Let me get you back to Sammy, who'll pull up some charts for you and finish the night out. We'll be here again if you have any questions.
I'm back. Let me show you my screen again. Thanks, Amber. Basically, you get I think you get the room for free or the course for free, depending on how you want to look at it. I mean, it's an incredible opportunity. You know how much I paid when I first started? $10,000 for education, just to take a course. Now, 10 years ago, 11 years ago, when I was starting out, it wasn't, that's what they were charging. But that's how much I paid, right? Just to take a class. So highly recommend it. And then again, you get the room basically for free for 6 months. Okay, so let me continue with this. And question here. The process, full or mini, what do you guys think? What do you guys think? Full or mini? Full, right? Full. Perfect. 5-minute picture perfect or not picture perfect? What do you think? Is the 5-minute picture perfect? Not picture perfect, Al. So I'm getting yeses and nos. Yes, picture perfect. Now, what would be one thing that I would have liked that would have made this 5-minute chart more picture perfect? It would have made it a little bit better. What's one thing that, if we would have gotten what? Extension, we have the extension. Extension meaning, the distance between the price and the 20 MA. We have that. We have $2. You just need 2%. That's $2. Yes, a wide range bar. Daryl, a wide range bar at the end. Notice the bars were pretty big, but the last 3 bars are not consecutively bigger. We got a wide range bar. Now you have to also think, if I'm not going to play this, if I'm going to say this is not picture perfect, so I can't play it off the 1, I have to play it off the 5. Look at this, guys. Am I going to play it up here long at like 35.50 or 60, stop at 34.50, $1? No, I'm not going to do that. That's too big of a stop, right? So if it's not picture perfect, then no play. I don't even have to look at the, but for me, I'm going to consider it picture perfect and play over the 1 minute bars high, stop underloaded it, and target, since it's full, 20 MA on the 5, target 2 is the 20 MA on the 15. Guess what the problem was? The problem is, this is 3 minutes before the close. See this? 3, 4, 5 minutes before the close. You're not going to get to the target. Now, why would you play 3, 4, 5 minutes before the close? Because the stocks, people will panic into the close. Oftentimes, I'll show you just a trade from yesterday, the best trade of the day, right at the close. I think it was like 10 minutes before the close. So people panic into, and I mean, if I was in a stock that was falling apart like this, I'm not going to keep it overnight. You see what I mean? Now, I don't put myself in that position where I'm still in a stock like, that's falling apart. I'm out here, let's say, at 40, 39. I'm not going to be getting out there, but let's just say I'm in a stock and it's falling apart. Of course, I'm not going to keep it overnight. What if it gaps down to $20? So what happens is people panic into the close, which causes stocks to go climactic. So in 3 minutes, this went $1 in 3 minutes. Okay, this is just an example. Okay, daily, full or mini? What do you think, full or mini? Anybody else? Good. I'm seeing full and mini, 50-50. This is actually a mini. It's the first bar in this direction, so it's definitely a mini. But think about it. Think about it like this. Look at the size of the bar. I mean, I would treat it like a full, even though it's actually a mini. Look at the size of the bar. Huge. I'm going to treat it like a full, even though it's a mini. Meaning I'm going to look for big targets. 5-minute picture perfect or not picture perfect? 5-minute picture perfect or not picture perfect? Chris, who are we talking to here? Didn't you used to have a last name? No, I've always had the same last name. As bad as it is, I've never actually had a different last name. I'm kidding. 5-minute is picture perfect. Think about it. Wide range, huge red bar. This was a huge red bar. Of course it's picture perfect. And even if it wasn't picture perfect, if it's not picture perfect, you can't play off the 1. You have to play off the 5, which means enter here, stop down here. Huge. You wouldn't be able to do it. Picture perfect, go to the 1 minute, enter above the 1 minute bars high. Take a look at the 1 minute. Out of the 4 examples that I gave you earlier, which example is this? Which example is this? Anyone? Out of the 4 examples, yes, 3, the breakdown with no follow through. See this? Breakdown with no follow through. Enter here, stop right here. Okay, target 1 and target 2 is the 20 around the 15. Look at the beauty here. One green bar after another. You don't need to get out simply because it touches the line on the chart. Trail it, and you can get more than the target. See this? And out here instead, which is basically around $30. Not here at 29. A beauty. Up, 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 up. Okay, out here. Does that make sense? Okay, let's see. Do I have more? Okay, this is from a couple of days ago. Yesterday. Yesterday? I think yesterday. Yeah, yeah. This is, this is just 10 minutes before the close. 1, 2, 3, 4, 5, maybe 12 minutes before the close. See this? 5-minute chart, up, 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 wide range bar. That's a beauty. Enter. Here, after 2 minutes, stop above it. Okay? That's CIT just yesterday. Today, I don't think we got many climactics. Now, the other thing I wanted to share with you is the trading plan, a strategy that you can write, right? I have 4 sections that for every strategy in my trading plan. The first section being the must-haves, the things that I absolutely have to have, right? So I list the pattern requirements, and then any other additional requirements like maybe, the reward to risk, right? The R to R, the reward to risk, the relative strength, relative weakness, maybe the extension from the moving average, maybe the time of the day. Are there any additional requirements? List them out right here. These, the pattern requirements, you just basically almost copy and paste them from the manual, which the class manual the course manual that Amber talked about. You almost copy and paste them from there. And then if it's a market related, if it's a market related strategy, climactics are typically not related to the market. They're not affected by the market, I should say. Then you can, list also the market requirements. Okay. If it's not affected by the market, then you don't have to. You can cross this out. But every strategy that I write, whether it's climactic or anything else, has 4 sections: the must-haves, the can't-haves. What are some of the things that if I have, then I can't take the play? What if the daily chart today is a mortgage gap down, a gap down under a wide range green bar, and the stock goes climactic? Can I still play it long? Maybe not, right? So what are some of the can't-haves? If this is a buy setup, can I play long after, if the stock goes climactic and then gives me a buy setup? Can I still play it long? Probably not. What if the retracement is too deep? What if there's a rounding or a square top? Can I play that long? No. So those would be some can't-haves for a pullback type setup, right? And then for the stock and the market. And then the third section is the would like to haves. These are the things, this is the icing on the cake. These are the things that I would like to have. If I get them, marvelous. If I don't, not a must. For the stock and the market, unless it's that strategy that you're writing doesn't have anything to do with the market, then you don't have to address the market. But it's always nice to have the market on your side, regardless of what you trade. And then the last section being the trade metrics, where you specify the entry, stop, target, and the management. Right? So every strategy in my trading plan has these 4 sections: the must-haves, can't-haves, would like to have, and the trade metrics. Okay, or call it the trade dynamics, whatever you want to call it. Whatever you want to call it. Does that make sense? Can I use this for Forex? Of course. Yeah, absolutely. MAs are simple. Yes, simple moving averages. All right. Please explain the 5-minute picture perfect chart. It would take too much time to go over it again. But if you want to listen to the recording, I went over it earlier, if you don't mind. Okay, and then just to show you that, remember this CIT from yesterday? Here's the P&L for it. No, this is today's P&L. Today was a difficult day for me because I knew what I wanted to do, but I just couldn't do it. And that was the DPRX. When I say I couldn't do it, I did it, but I snuck in and out quickly. Now you might say, well, why is there 2 different P&Ls? Well, it's a long story, and I thought I would, when I showed my P&L, it would look and sound weird. Because I trade with 2 different brokers. And the reason for this is so if one broker doesn't have the stock available, I can go to the other broker, right? That's one reason. Another reason is I use market maker routes. Okay, market maker routes, and those routes you can't really trade you can't abuse them. They're free routes. You don't get charged ECN fees. So I want to kind of spread my trading around. So that's why I recently opened another account with another broker. But that's why you see two different P&Ls. So I traded the stock DPRX today, and I would have liked to have held on to it. But this is part of the 5-cent program that the SEC just came out with, and the stock was a $2 stock, and it had 5-cent spread, meaning huge spread. So I really didn't stay in it for as long as I wanted to, because I was worried. I'll show you just a couple of days ago, I got stuck in one stock where I couldn't exit at all, and it was it was part of that 5-cent program. So this is today. The DPRX is highlighted to tell you that this was a mega gap down, sort of like a climactic on the daily time frames, not on the intraday. The day before that, the CIT, which I showed you, played it in both accounts. See that's the day before that, on the 24th, Monday, and that made my day. The T was a scalp. I think the T was pretty nice, and that was it. The rest of them were small. This is, you might say, well, why are all these small trades? Because sometimes I get into a play just as a scalp, in and out quickly, or sometimes I'm trading a stock to add liquidity, right, and get the rebate, and I'm just messing around with it. So I'm not trying to make money. I'm just trying to add liquidity. But the CIT was a climactic. I'm showing you my P&Ls for the last few days here to show you that every single day there's a climactic on there, right? All of these were climactics: the T, the FOXA, and the Twitter, right? Over here down at the bottom, Twitter, T, Disca. What happened with the Disca should have been a much better trade, is that on Friday, if you traded Friday, you might remember that a lot of things went nuts right at the same time. The Disca, the Fox, the T, the TWX, right, the Time Warner, at the same time. So I just lost track of the Disca. So otherwise, that should have been a much better trade. Every day there is a climactic on my play, on my P&L. Every day. Friday was also the best day I've had in some time. You can see I made 43 in one account and 4,000 in the other account, so $8,000 a day. That's pretty great. I mean, that's nice. Now we are in earnings season, and this is the time to do it, really. If you're not making money this time of the year, then it's a problem, because it doesn't get better the rest of the year. This is the best time of the year to be a day trader. So this is this is today. Pretty nice, but it was a painful day for me, because I really, and the Nelson was nice. It's not showing here. See, Nelson was a nice short. It was really hard for me, because that DPRX I thought would be a home run, and I just kind of got out of it because of that 5-cent spread. And then a couple of days ago, I'll show you, I got stuck. You see it? That FNBC. First I got in it, no problem, getting out in this account, and then I couldn't get out of it. And this was part of that pilot program that the SEC just rolled out, where stocks trade with 5-cent spread. I just couldn't get out of it at all, and I had that huge loss, which was I was shocked. I mean, I was stunned. You look at my P&L every day. I don't have these big losses. I may have $300 loss, $500 loss, but I don't have a $2,000 loss. So this FNBC played it twice, and the first time no problem. The second time I just couldn't get out of it. I had 4,000 shares, tried to get out at 985. I got filled at 945, 40 cents later. So it turned into a big loss. Let's see what the questions here. Sam Trader, so I made 3,500. Yes, today I did. Yeah. And let's see what else. Can I trade this climactic using higher time frames instead of the 5, say the 4-hour? Maybe. I'm not saying you can't, Mike, using, like, let's say the 4-hour time frame. You can, but the problem is the stop is going to be really huge. And don't forget, when it comes to climactics, we're going counter trend, right? We're actually trading counter trend, so we want to be in and out quickly. So if the stock has already moved up a lot, and now you're trying to get in it, then it's hard. But you can definitely trade the methodology on any time frame, regardless of the time frame. Okay. The one thing again is climactics because they're going counter trend. What size account? I have, tell you the truth, I've always kind of traded with a $200,000 account, but that doesn't matter. What matters is I risk $500 per trade. That's what matters. Is I risk $500 per trade. Okay. The QUNR, I kept it. I mean, this was a swing overnight. That's why you see unrealized. You see this wriggle, and I had it in both accounts. Yeah, wriggle 1390 and then 2100. That's the same wriggle a couple days ago, exactly the same as the what is it today's DPRX, exactly the same play. This one made 1700, and I was worried. I didn't really want to. I was worried. This one, take a look at this wriggle, 2000 right there, and 14. Yeah, and 1400 right there. So yeah, that's what this play today should have made. In fact, it should have made even more. Okay, so that's just wanted to kind of show you. Let's see. Are these trades called in the room? Almost every one of them. Every big one is called in the room. Yeah. Do they need market direction? Now there are situations where the market is better than other times, but the climactic setup is one of the few that doesn't depend on the market very much, right? I'll give you one example when the market is nice to have. For example, let's say you're trying to play the stock long, and it's definitely going climactic. See this? It's definitely and the market is doing this. Is almost going climactic to the upside. Well, I would think twice before playing this long. Why? Because this stock is really diseased, is really sick. And then as soon as the market comes in, this probably continues lower. So you want to see the market actually down with the stock, and perhaps exaggerating that move in the stock, right? You don't want the market to be up at the high of the day, and your stock, the stock that you're trying to play long, is at the low of the day. There's a problem there. Now, what if you're trying to play something long, and then the market is running into resistance, right into resistance, let's just say, and maybe coming in? Not the best time, but again, if there's any setup that's not affected by the market very much, it is the climactic setup. So you can trade it without the market to a large extent. Okay. All right. Anything else? I don't know what else do I have. I don't have any other slides. I am aware of the time here, and it's like 6 o'clock New York time. So I'm gonna wrap it up. Okay. As Amber said, the next class is offered November 7th through the 11th. Jay, I'm sorry I won't be able to go over the 1, 2, 3 pattern, but basically what it is I'll just go over it quickly, but I'm not going to go live because it would take me too much time. You're looking for a breakout, right? You're looking for a breakout, and then like so the breakout bar, that's the igniting bar, and then the stock typically after a wide range bar puts in a doji bar. Now, if it proceeds to continue higher, that's like the 1, 2, 3 pattern, right? Now, there are other requirements and things to look for, but that's basically simply what it is you have a breakout and then kind of a 1, 2, 3. All right? Okay, sure, you're welcome. Does a trend end and reverse with last proverbial seller or buyer? Okay, yes, I mean, to some extent, the tops form, or tops form when the last person that needs to buy has already bought. Bottoms form when the last person, the last trader that wants to get out, that needs to get out because they're in so much pain, they're in so much trouble. When the last person that wants and needs to get out has gotten out, that's when the bottom forms, right? That's when the stock goes climactic. All right. Amber, that's funny. Anything else? So this is, I just want to tell you something about this, is that this is basically if you were with us at Pristine, this is the updated TPM class, Trading the Pristine Method class, which is where we all started. All of us that, became something that, right, succeeded at this. We all started with that class. Now, this is what I love about it, and for those that took it with me last time, is that it's broken down now into bite-sized pieces, right? So it's not just one long weekend where which is fine, but after a few hours you get tired and you can't keep up, right? This is every day for a whole week, 2.5 hours after the close. And that's wonderful. That's beautiful. The graphics, the updated menu is just out of this world. Beautiful, beautiful stuff. So I highly recommend it. The other thing is you get the room for free for 6 months, right? I think it's what the deal is. I don't remember, but that's what I saw Amber was going over. So highly, highly recommend it, okay? There's nothing in it for me, so I don't really care if anybody signs up or doesn't, but I'm just letting you know, this is where you want to start, if you're going to start at all. I thought I would just take a picture of the table of contents to show you what's taught in this class. Simple art of trading review, a closer look at trends, the transitional analysis, how stocks basically transition from being bullish to bearish to sideways, how you can take advantage of it, the key strategies, using the key strategies in stages 2 and 4, in the uptrends and downtrends with the amplifiers, using the key strategies with certain amplifiers that make the play even better. Like I can teach you, like I just kind of shared with you what the 1, 2, 3 was, right? I said 1, 2, 3. That's not enough to make money by just drawing something for you, and right? See what I mean? There are many things that the details is really important. So the amplifiers, the things that make the setup even better, the breakout, breakdown, the 1, 2, 3, that's one. There's a whole chapter on it, and the bull bear 180. The climactic setup is right there, chapter 10. So that will be taught. I wanted to, and then money management and putting it all together. I wanted to kind of take some time today to share with you to go over one little section, right? Out of the 12 chapters, one little section. And I wanted to kind of go over that with you and show you what you actually learn. All right? So that's what I wanted to do tonight. And I hope I was able to accomplish that. I do want to say thank you guys for attending and being such a great group to be with. I hope you enjoyed tonight's presentation, and I will talk to you next time, okay? All the best, whether you join us or don't, all the best. Wish you all the best. I hope you do very, very well in your trading. And if you have any questions, feel free to reach out to me. Thanks, guys. Have a good night.